individual or individuals named Satoshi Nakamoto who wrote a paper in the midst of the financial crisis. So I start on Halloween night, October 31st, 2008, with Satoshi Nakamoto. And we truly don't actually know who this individual is, who wrote a simple paper with this little thought. I've been working on a new electronic cash system that's fully peer-to-peer with no trusted third party. But it was trying to solve a riddle that had existed from the 1990s when the internet started and there was peer-to-peer communication without a centralized authority. And the question really was, in this paper, might Bitcoin or something like Bitcoin be another layer on the internet to peer-to-peer move value on the internet with no central authority? All four of these other layers and the many sub-layers have no central authority. One government could say, I want to shut down the internet, but it still goes. It still exists. There's no central internet authority like we have central banks. So what is a blockchain? This will be the only technical slide. But first, it's a time-stamped append-only log. These were around from the early 1990s. Two gentlemen working at Bell Labs actually came up with the concept of time stamping and appending a log, adding blocks of data. Blockchain is just blocks of data added over and over again. So blockchain technology basically verifiably moves data on a decentralized network. That's the key to it. Data being moved on a decentralized network. And yes, the data can also be computational code. But if there's no central authority, who gets to add the next block of data? The tougher issues, frankly, are interoperability and governance. Governance being, if you have an immutable ledger and an immutable technology, how do you do software updates? How do you push out software updates and actually change something? I mean, finance is about moving value, which is data, and risk, which you can think of as computational code or an algorithm, around a distributed network, 7 billion people. And Simon and I and our co-authors thought it could be a catalyst for change in this sector. Central bank legacy payment systems give some opportunity for this technology, particularly in, believe it or not, legacy countries like the US that have not updated our technologies in the payment world. We are doing that, but we haven't done much. There's also, of course, finance has a lot of crises. This room has studied these crises, and fiat currencies have instabilities. For those who think that Bitcoin is a currency, those three classic roles of a currency, of a store of value, a medium of exchange, and a unit of account, though it doesn't fulfill all of those fully, I think our paper would say it could. And in some instances, it is a store of value, even though it's a very highly volatile store of value. In some instances, it's a medium of exchange, but usually in the dark markets and drug markets and illicit markets, but it still is a medium of exchange, even if most of society might not like that. In terms of what's going on, three quick things I'm going to hit. Initial coin offerings, you may have heard, is a new form of crowdfunding that's going on. Token economics, people might call it. There's been 4,000 plus offerings. Many of them are scams and frauds, but some of them might take off. One might think back to the private banknote days as well, that you're sort of having private banknotes for file sharing or file storage or private bank. I see Marty Grunberg from the FDIC, but it's another form of, in essence, private banknotes, you might think. Ethereum is quite big. A currency called Ripple that you might hear in the banking sector is probably third, if I remember, on the charts. But it gives you a sense of the volatility. There's a lot of investors in this space. The startups also have a little bit ability to beg for forgiveness. I'm sorry to say this with such an esteemed regulator, but incumbents need to ask for permission, and startups tend to break a bunch of china and then get hauled into the regulators, and then there's some regulatory forbearance to get them into compliance. They usually don't go to jail. Sometimes they do. Public policy frameworks matter. There's three. Most people want to break the back of illicit activity, but the implementation is spotty, and it's tough implementation. We talked about financial stability, and then investor protection. I'd say investor protection's all over the lot. The SEC here and the Canadians are kind of leaning in about these initial coin offerings, which represent about a quarter of the $200 billion market. But many other nations are saying, let 1,000 flowers bloom. This is a new form of crowdfunding. We should not regulate it except by consumer protection laws, but no investor protections. And so that is a wide open, almost Wild West. The blockchain is not fully private. You can actually see what's called public addresses or Bitcoin addresses if you're in Bitcoin. It's how the FBI tracks some of the Russian involvement in the 2016 election. So now there's a new law in Europe, the privacy directive, and a lot of financial firms are saying the blockchain is too public because it's a public ledger, how to deal with that. And so it's an interesting set of policy issues that we don't have yet in the US, but it's real. Crypto exchanges are another area that are a place that you could engage as public policy, but they lack any oversight. There's about 200 exchanges right now, and they're a mess. That's a technical term. There's really no oversight in terms of manipulation. The Japanese are probably furthest ahead trying to make sure that they comply with what we here in the U.S. would call Bank Secrecy Act laws. But in the U.S., they're still registered as state money transmitters. I believe that we need to do something if this ever grows bigger. We need a national regime, and the Department of Treasury and Financial Crimes Enforcement should be involved. Central bank digital currencies, and then I'll close out. It's kind of a fun topic. First, I would say central banks already issued digital currencies. It's called bank reserves. That's already happening, and now the private sector is starting to do something called stable value coins. One's called Tether, which is the biggest, has some questions about it. So the private sector is nudging up. The central official sector already has digital currency, though it's wholesale and it's a closed loop with the banking system. So the real strategic question for central banks is whether to open up their ledger, open up their digital reserves, be expanded. Most would say that the more you make it like a bank deposit, the more you'll disintermediate the commercial banking sector. And thus the concerns are real. However, believe it or not, there are countries very serious about this, and Sweden leaning forward. It might happen in countries that are destabilized too, I don't know. So that's it, but basically the peer-to-peer networks is the central innovation of Satoshi Nakamoto, augmented by Buteran's computational code. We think it is probably going to be a catalyst for change, but there's a lot of hurdles, and to get there, it's got to address those hurdles.